Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Manash. This is the weekend edition where we interview notable people from the world of real estate investing. Today's no exception. We've got a great guest all the way from Kansas City, Missouri. Welcome to the show, Logan Freeman.
Thanks for having me, Victor.
So, Logan, you've been in this business a little while now, but for those who don't know you, and I know we've got some mutual friends that we've met at several conferences before, and you and I have met before, but for the folks who don't know you, why don't you give a little bit of your backstory and how you got into this particular segment of real estate investing?
Absolutely. About 5 or 6 years ago, I finished up school and started purchasing my first homes here in Kansas City, and I was doing very small live-in flips that allowed me to put some money in my pocket, but also utilize my own construction knowledge. And I learned the power of real estate at that point. That segued into a full-time career into not only being a real estate broker, but an investor here myself. And I had the pleasure of representing about a $45 million fund here in Kansas City that was purchasing assets, renovating them, leasing them up, and refinancing. And one day after we did 225 doors for those guys, I sat down with them and I said, hey, we've had a really good run. I know your fund is kind of tapped out, but can you tell me how you guys got started? And that question led me to this big word called syndication that I had never heard about. And so at that time, I realized that I wanted to start putting my own syndication business together, but I knew nothing about that. So I started flying around the country and meeting with folks like yourself and reading everybody's books and going to events, and came back to Kansas City, moved my license to a commercial and multifamily brokerage to learn that business. I have a successful brokerage business as well, and started putting together syndications here in my backyard. So that's how I got started into what I'm currently doing at Live Free Investments.
I love that. Now, Kansas City is a little bit of a different market. It's not one of the coastal markets, and it's also not like your typical Midwestern market. It's really its own market. There's nothing else like it in the country, and it's attracted a lot of investment from other markets. What's that been like?
So what I love about Kansas City is that there's a lot of outside investment, like you mentioned, coming in here to Kansas City, which is allowing us to not only renovate a lot of buildings, but have a lot of growth on the brokerage side. But there's still really great opportunities to actually put together partnerships. And the reason being is, we have a management team here in place. We have a lot of different relationships around the city that allow us to have inside scoop on the larger projects that we would want to bring to our investors. Alongside that, I think that a lot of people think that Missouri might be one of those flyover states that there's really just not a lot going on. And, that's not really the case. We have a lot of tech here. When I was in the startup world, I worked out of the first house that had Google Fiber in the country, and that's here in Kansas City, Missouri, which is pretty incredible. And so a lot of businesses started to follow Google and the Google Fiber trend, and we kind of call ourselves the Silicon Prairie here, not the Silicon Valley, but the Silicon Prairie. So there's nice tech here. We have a great plethora of actual world headquarters here, Garmin and H&R Block. So we have great job growth, and affordability too, I think, is another one that has really allowed us to be a good place for people to invest in. And so with all those different factors kind of coming together, we are definitely on the up and up. And many of my investors who fly into town weekly with me, whenever I tour them around, they really say, hey, Logan, this really feels like Denver did 5 or 10 years ago. And I'm not really familiar with Denver, but a lot of these guys are that invested there. And that also feels good to me, because if we are on the growth trajectory and a lot of outsiders are seeing that and feeling that, there's just going to be even more opportunities for us to invest in and continue to purchase properties here in Kansas City.
I love that. And of course, I've been to Kansas City back when I was in the high-tech industry and when I was in the telecom industry. Sprint, who are headquartered there, were based in Kansas City. And of course, Kansas City post-year 2000, with the dot-com bubble that burst and everything else that caused a little bit of a downturn in the telecom industry, went a little bit sideways. And it kind of went sideways for a few years, but I think it's really coming back into its own. It's seeing new growth, new jobs, and new population growth.
Yeah. Absolutely.
Well, that's one of the fundamentals that I always look for in any market, and it's that influx of jobs, it's that influx of population, because without that, it's very, very difficult. Prices will fall if it's a shrinking city. I mean, we've seen that in other cities like Detroit, for example, that have lost population. Many of those cities are going through a world of hurt, and there's a reason why you can buy a house for $25,000 in Detroit, put it on your credit card, and still get $800 a month in rent. It's
That's
because
right.
eventually, when a city loses half or more of its population, supply and demand dictates that prices are going to fall. So fast forward to today, you did work with this fund. You've started working on syndication. You're involved in property management. If you fast forward the next 12, 24 months, what's in the future?
I have really found my niche helping out-of-state buyer clients with their 1031 exchanges. And so my goals for 2020 are around not only finding good properties for my buyer clients to purchase outright for themselves in their 1031 exchanges, but to continually to find larger multifamily and retail projects that make sense for our investors that don't necessarily want to be super active in the process. And what I've been able to do is find a way to be able to support an investor if they want to purchase directly, and or if they would like to get a lot of the benefits of real estate but not a lot of the day-to-day management. I think that from my standpoint, I'm able to offer my clients something that a lot of other just real estate agents or brokers are not. So my goals for this year are to find 4 to 5 larger projects, 100 plus multifamily unit deals that we find utilizing our relationships here in Kansas City, and either offer those to my investors to purchase outright, because a lot of them are looking for those assets, or if it fits and we have the bandwidth to actually put together a partnership to be able to offer passive investing opportunities for our investors. And so we do have a sales volume that we're looking to target for next year, and we're looking to double what we did this year, and I think that we're going to be able to do that utilizing some of the unique approaches that we've got here in the marketplace.
We've seen in many markets with the growth, there's been a lot of influx of money. In particular, I'm thinking of the Dallas-Fort Worth area where there's a lot of money coming into the market, and virtually every project that ends up on the market almost becomes an auction. You get 10, 20 offers on any multifamily project. Are you seeing that same dynamic in the Kansas City market?
We are, and I would say that the projects that are going to the capital markets with the CBREs and the larger brokers here, they definitely are doing call for offers and are getting their prices. What we've been able to do this year is utilizing either a management relationship or just a relationship that we have built over the last 17 years being active here. Something that, is not going to actually go trade. And everybody always talks about off-market properties. And I think that it's more of an art and not really a science. I really do. It's a really relationship game. It's really, you have to evoke that confidence as a buyer client to purchase one of these larger assets that aren't going to go to market. But the things that are going to the capital markets, the 300 plus unit Class A or B plus multifamily projects, they're absolutely getting bid up, and it is an auction scenario in most of those.
What's happening in the world of new construction in Kansas City right now?
There's a lot of Class A multifamily being built, Victor, and a lot of it is in the suburbs, and which actually is mostly the Kansas side of things here. So a lot of folks might not know, but Kansas City, Missouri is the big Kansas City. There is a Kansas City, Kansas. There's not a whole lot in KCK. But in the Kansas City metro area, we have some of the richest counties: Johnson County, Overland Park, Leawood, a lot of these awesome suburbs that are popping up and being developed. And the reason for that is historically Jackson County, which is here in Kansas City, Missouri, has some of the worst schools in the country. And if you I live on State Line Road, so one side is Missouri and one side is Kansas. You can go from the worst schools in Missouri in the Kansas side to driving across the street and going to some of the best schools. So you'll see a lot of folks who are my age that are having babies they will leave the central business district and they will move down to the suburbs. And a lot of times they're going to rent for a couple years before they buy their houses because those houses are a little more expensive. That's what's happening in the suburbs. In our central business district, there's a couple really large players that have really spent a lot of money. Millhouse is one of them out of Indianapolis, and Cordish is the other one here that has been really putting a lot of capital into our downtown. So you're seeing a lot of skyscraper type Class A multifamily product being built. And, these rents are close to $2.25 a square foot, which I think we're getting close to Chicago rents in some of these buildings. The absorption rate has been pretty good for these guys. And so I'm interested to see, it's not what we focus on, building and doing Class A multifamily development. We really focus on more of the affordable space where it might be $1.25 to $1.75 per square foot on the rent side. And I'm very curious to watch what happens on the absorption of all of these Class A multifamily projects, because I was just watching a CoStar webinar on apartments, and I think that there's about 660,000 new Class A multifamily projects being developed and to be delivered in the next 2 years. And I think a lot of people have their eyes kind of raised to seeing how that affects the market. Same thing's happening here in Kansas City.
The one thing that's obviously driving that is that the difference in cost from a construction point of view to build Class A, Class B, or Class C is within really just a few percentage points. So all of the things
Right.
being equal, why would you ever build Class C? It doesn't make any sense. Why would you ever build Class B? But for a couple of extra bucks, and I really mean a couple of extra bucks, you might as well build Class A, because really what you're talking about are the amenities. The difference between a laminate countertop and granite in the grand scheme of things is a rounding error
Right.
in terms of the overall construction cost. So that's why everybody's building quote unquote Class A. It's really just a new building standard. That's really all it is at this point.
Yeah. And, we kind of take the same approach that your company does, Victor, on buying the line and working to move the line. And so there's specific areas that we've been operating in for years in Kansas City that maybe outsiders would not be as comfortable with. We do have what's called the racial divide here in Kansas City, and it's called Troost Avenue, which is a street here. And that we have been working alongside different community organizations, purchasing buildings up and down Troost around the colleges to help continue to bridge that gap. And we just last week closed on a 40-unit apartment complex right in that same corridor. So where we're really focused on is trying to redevelop older buildings, so 1900s circa buildings, into affordable rents, which are around $1 to $1.15 a square foot. And the way that you have to do that is you have to be comfortable going into some areas that maybe other people might not. But with our management, with the units that we own in those areas, we're able to do that and continue to add value to the community, but also continue to bring affordable rents to the marketplace. And our vacancy rates are extremely low on those projects.
Well, the key to doing that, of course, is scale. If you do one or two, it's not enough to change the character of a neighborhood, in the sense that, if there are undesirable elements in the neighborhood, whether it's drug dealers, gangs, what have you, you've got to put enough scale that those folks are going to go elsewhere. You shut down the liquor store where folks are hanging out all afternoon, and all of those types of things, so that you really bring the community back to being a true community where people are, feel safe, letting their kids go outside and play and all of that kind of stuff. Race and demographics aside, you really want to build safe communities, and it requires a bit of skill to do that.
You're exactly right. And not only does it require people to redevelop the multifamily and the residential properties, what we see a lot of the times is it takes a developer to go in and have pretty large holding costs on commercial buildings, because what's happened here in Kansas City is a lot of people have developed these older residential buildings, and that's great, but you still have the payday loan guys right down the street. You still have the liquor stores. You still have tattoo shops everywhere. And that's okay to an extent, but when every building is like that, you have to think about, well, who's going to want to live over here? So what we've really tried to focus on as well is not only buying and redeveloping the multifamily sector, is, we're doing the same thing in the commercial side right now, which you really have to be ingrained in the community. And so that allows us to find other opportunities that we can purchase and know that we're working on, moving that line.
I love that. In order to do that effectively, you've got to have some pretty strong systems. I mean, you've got to have strong property management systems. You've got to have strong construction management. We're talking about renovations, not brand new construction, but it's construction nonetheless. How have you brought those into your team and put together that structure so that you have something that's going to be consistent and repeatable?
Yeah, absolutely. I think you hit it right on the head too, because sometimes renovating an old building is harder than constructing a new one, and or at least in our experience, it has been. So, we have a full construction management team at our brokerage, and that we utilize that is focused on these older buildings, because if you want to get a 1970s or newer constructed building, it's going to be really difficult to find that in the downtown, in the area that we really operate in. And so we've understood that we had to bring our operations and our management in-house to be able to keep a finger on that pulse. And what we've been able to do is have one construction manager that has great relationships with a lot of different subcontractors, which allows us to know what the price is going to be. We keep these guys busy, not only for ourselves when we purchase a building, but it also is a third-party option for our clients as well. And so I can't speak highly enough about having somebody that is local, that knows the city, knows who to talk to about permits, knows who to talk to about building codes, and can get things done quickly. Because having just a residential contractor come in and try to do a commercial building can be an absolute nightmare. And I'm actually going through that currently on one of my projects. To get the pricing that I needed to, I was working with a construction company that was primarily residential, and we have been delayed about 6 months now, and we are still not occupied when the project was supposed to be done in November, and we're still about 4 or 5 months out. So I think that understanding it is the only way to be able to effectively do these projects, and the only way to understand it is working with people who have done it before. And that's it's a really hard thing to communicate with people whenever they're just looking at a pro forma. It's kind of that intangible piece that, yes, we might be a little more expensive, but up front, but at the same time, project's going to get delivered on time and on budget because we know who to use and we know who to call. And so having that in-house at our brokerage has been extremely important for the execution of our projects and for our clients' projects, mind you.
Well, for the listeners at home, if you're getting anything from this, it should be the difference between just calling up your average real estate agent down the street versus someone who's truly in the business of assisting investors, working on renovation projects, working on value add deals. The folks that are in that business on a day-to-day basis, they structure themselves differently. And the way that Logan is talking, it conveys that confidence to me. I mean, he does the same sorts of things that we do. He's got the functions in-house. He's got the construction management in-house. He's got the property management in-house. And that's essential to building a scalable business. So if folks want to learn a bit more, what's the best way to get in touch?
Yeah, Victor, going to my website, which is just livefreeinvestments.com, is the best way to get a hold of me. They can contact me through that website, and I'd be happy to chat with anybody.
Well, Logan, thanks for sharing your story with us. And for the listeners at home, have an awesome rest of your weekend. Definitely get in touch with Logan at livefreeinvestments.com. In the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.